And that
No,
means we
no,
can talk over
just let
the
it go. Let it go, bro.
Is music not on?
Oh, nobody knows yet.
Is this why you lost Trademasters last night, Tyler?
I'm lost. Help me out. What do I need to do?
Just play it, dude. Just play it all the way through.
You're good, bro.
Yeah. And everybody just kind of pounding their desk right now.
We all know the tune. I'm bouncing over here.
I enjoy it as well.
Tune.
All right. Welcome out to our halftime report here today. It is Thursday, 2/25, and we've got Coach Tyler Craig back. He was here with us yesterday. He also had an appearance on Trademasters to defend his belt last night. We'll get to that in just a second. But Tyler, how are you doing today, sir?
Apparently not so great, Tim. I don't know what happened there, man. I'm gonna blame it on lingering effects from last night. But we'll get it together.
Matt, how are you doing today on a Thursday?
I am doing fantastic. Excited to be here with the crew.
I agree.
I really want to hear about Tyler and Trademasters, though. Let's talk for at least 15 minutes about Tyler's performance on Trademasters yesterday. In fact, I say we just use this hour as just to break down and help Tyler, because you would think somebody with his level of experience wouldn't need our advice. But
what happened, Tyler?
Like, what happened there, bud?
I'm just deciding if I want to go the sarcastic route or
I definitely chose to go the sarcastic. I handle it sarcastic. So
listen, the judge is blind. Okay, we need some new blood. We need a panel. We need a panel of judges to get a more collective judgment.
As with the government, more is always better, Tyler.
That's right. I feel like if I'd had 10 judges, I'm sure I would have got 6 of 10 and it would have been fine.
Tyler, Matt, you know this. Matt and I grew up in a small town. We played basketball, football growing up, and there was, only so many sports officials that would come in and officiate our games. And so if you started out the idea of just yelling
eventually
at the ref,
that number went down to nobody.
And then,
nobody was willing to officiate the games.
So you got to treat the judge with kindness. There's no doubt about it. Who knows who we would replace with Mark? The devil, my friend. You've won many of them.
I got it.
Congratulations to Coach Cody for winning Trademasters last night.
Good job, Cody.
Have, brought the heat there. I know a lot of you guys out there were watching the show as well. I went back and watched the replay. Comment thread was great. The energy was great. The activity was great. Really, really fun show. And Tyler, I do hear that you did win the joke round. And you made me laugh with telling me that joke.
For people that didn't hear the joke, at least let's do the joke.
Okay.
Yeah, it's good.
My girlfriend broke up with me, so I stole her wheelchair.
Oh man!
Guess who came? I gotta do it again, Matt.
Go.
Once you kill my delivery.
Stepping on his line.
Sorry, I thought you were supposed to respond like a knock joke. I thought you're like, really? Oh, that's unfortunate. Like I thought you were supposed to participate. I'm sorry. I'm new to this dad joke thing. I'm sorry.
Okay, mute him, Tim, please.
Yes, get him out of here.
My girlfriend broke up with me, so I stole her wheelchair. Guess who came crawling back?
Am I supposed to say who?
Now you can laugh.
Okay. That's I can't.
That was the punchline.
I can't. No. You got me and Tim rolling earlier today. I love that joke. That joke's funny.
It was so funny. Yep. It snuck up out of nowhere, Tyler.
I have not had a chance to review Trademasters last night, so I'll reserve my opinion on who won. But Tyler, from all of your subjective commentary earlier today, it seems like you have a very strong subjective case.
I am appealing, and we're going to see what comes back. Yeah.
Very.
All right, let's get down to market analysis here, guys.
Yes.
Obviously, out there, if you're watching the show right now, hashtag Team Tackle in the chat. Thanks for coming back. As always, keep it positive, keep it energetic, keep it light. Make sure you give me a thumbs up on the channel as well. And if you're brand new, we do this show each and every day, 12:30 Eastern, whenever the markets are live. Subscribe, click the bell, come back and join us. Start top-down analysis here. Obviously, we got a red candle, pretty good selling across the board in terms of just the indexes on a one-day performance. Really good rally yesterday. We're giving a lot of that back here today. Tyler, what are you seeing technically before we get into the news?
It's unfortunate. I mean, this is not what you wanted to see when you get a nice 2-bar bounce. This does make the market more messy and choppy. I will say, on a bright note, yesterday's rally gave you the ability to get smacked 2% today and not break trend. So at least we rallied yesterday. You can imagine if yesterday was a doji, you get down, 1.72% today, we'd be already testing the lows here. So thank goodness for yesterday's pop, because this could just turn into a little bit of chop and then we go higher. I think all eyes are on that low. And we mentioned this yesterday. I said, you have a new threshold, you have a new pivot low. That's your line in the sand. Yes, today is a little bit unfortunate, but it's all about, do we stay above the low from 2 days ago in the 50 MA? You break that, then we can have a more serious conversation. Until then, I'm viewing this slightly bearish, but could just be noise.
Obviously, I do want to get a thorough read in terms of weekly, intraday. Whenever you get volatility, the market's up, down, whatever, you start looking at multiple timeframes from a top-down analysis perspective and across the different indexes. But just, bigger picture here, Matt, how do you approach a day like today? I know that just philosophically for me, I know in my own personal accounts and the way I'm approaching day, it's not really a new entry day. I mean, it's not that I would be opposed to it. I'm still willing. There's still 3 hours in the trading day. So if I find something that fits every parameter, I'll do it. But I've spent all of my morning managing, preparing for tomorrow, preparing for next week, assessing risk, all of those kind of things. What's your read just on the big picture here? And Tyler, why don't you take that one first?
Yeah. So for me, I agree with you in terms of taking taking inventory of what you have, right? So you have to think ahead in regards to, could this snowball? Could this get out of control? Could this be the beginning of a bigger kind of two-pronged correction where we had the pullback, the bounce fails, maybe we roll over, guys? I mean, it could happen. So I think what I do with this is it says, okay, this is a slight change in character. I was expecting the bounce to follow through because that's what other bounces have done for the past 3-4 months. This one didn't. So, hey, could get a little messy. If we're down the next 3, 4, 5 days, I don't want to be assessing risk at that point. I want to do it now. And so if I've got short-term directional trades, are my stops in place if this gets out of hand? Am I comfortable with my overall portfolio exposure? If so, let it play out. Let it play out. Don't overreact. One red bar, no bigs. Didn't break support yet. If not, okay, well, do you need to get a little smaller just in case this is something bigger? It totally depends on the trades you have, but it's never a bad idea when you get a gut check like this to just assess risk and make sure you're comfortable.
Well, and I certainly agree with that, Tim. And to answer the question, I think today's kind of a throwaway Thursday, honestly. And the reason I say that is, I think you got a little bit of a different read today than you did on Monday when we saw some volatility in the markets pick up a little bit, and specifically in the NASDAQ. But unlike Monday, where you were fighting for the support bounce in the NASDAQ, coming into today, where you're fighting for a very similar thing in the NASDAQ, and quite frankly, you're fighting for that very similar thing in the in technology and discretionary sectors as well. But unlike on Monday, where you were fighting for that support bounce, on Monday, you also had finance, energy, industrials, and basic materials all setting up in bullish breakout patterns. And they were really, really good breakout scenarios. And, we talked a lot about that on Monday and Tuesday as the market was fighting for that support bounce. And, I don't want to say fighting for its life for support, because that's not what it is, but, you're fighting for that support. Today, you have a different scenario. Today, you have very similar volatility as you had earlier in the week in this specific area of the market. But unlike on Monday, as you were coming into the week with a real good full, technical view of industrials, the technical view. And if you can look at these sectors very quickly, Tyler, if you can look at industrials, if you can look at, energy, if you can look at finance, you look at basic materials a little bit, you're sitting right underneath a breakout channel coming into the week. You're breaking out. You see follow through on Monday, Tuesday, and Wednesday. You take a look at industrials, you see the same thing. You take a look at energy and finance, you see the same thing. And so you have this really good technical breakout situation happening into that cyclical area of the market. They hit, they run, they all work. Well, you also have this moment in the market where you're starting to see some fairly significant separation in sector performance, with a lot of the pain, in that discretionary space, a lot of the pain in that tech space. Well, you're not seeing that pain in finance. You're not seeing that pain in industrials. You're not seeing that pain in the cyclical areas of the market. What you're seeing is those trades that were continuation trades from last week that kind of triggered secondary triggers earlier this week. They all worked out. They're now all overextended. And so now it's a matter of, okay, you're overextended in these areas of the market. Once again, specifically finance, energy, maybe slightly industrials, but I certainly don't have the same read in industrials and basic materials as I do energy or industrials. But now you're a little bit overextended in those areas of the market. You're underextended in the NASDAQ and in the discretionary space. And so you got this weird little pocket happening in the market, whereas you have fairly substantial weakness in discretionary, fairly substantial weakness in technology, but you have relative strength and some very impressive relative strength happening in the past week to 2 weeks in industrials, energy, basic materials, as well as finance. And so you have these pockets that are happening, and we call this a stock pickers market. It's still a stock pickers market. Nothing has changed there. I just feel like today is a little bit different than it was on Monday and Tuesday, and specifically not because of what the NASDAQ is doing. The NASDAQ's doing something fairly similar to what it was doing earlier this week, but because you are now in an overextended short-term environment in those areas of the market that were really, really good this week. And so now it's a matter of, okay, we say it all the time, but it's a matter of being patient, waiting for that. So for me, let me ask Tyler a question. Tyler, do you want to buy again energy right now?
Based on today's
right now,
candle?
today?
No,
neither do I. Tim?
Nope.
No.
New entry.
Why? Why? Simply put, why?
It's overextended. I've already got
Done.
positions.
That's all we need. That's all we need. Right? You're done because you already have positions and you're letting those positions work out. You're in the management phase of those. You're not in the, hey, let's go look for new entries in energy, unless you're doing some naked puts and you're looking for ownership. You're not in that. You're in the, hey, let's see if it will form that high base, right? And if it forms that high base, all those trades that you were buying on the breakout are all legitimate, all good. You're just in trade management mode. Hey, let's see if we can form a flag-based pattern that we can scale into. But you're not in, let's aggressively get into a position in energy here today. That's not anybody looking at energy here today, unless you literally just woke up from a hibernation over the last 2 weeks. Right? That's the only individuals that are looking for new entries in energy today are literally the only people not in energy as of yet. And so now it's a matter of, okay, let's be patient here. Let's wait for a high base. Let's wait for a flag. Maybe we see a retracement, but you're certainly overextended there. And you can say the same thing about finance. Tyler, come back to, let's go to XLY, please, if you don't mind. XLY. Tyler, do you want to aggressively fight with the hedge funds today, fighting for that support bounce? Do you want to join the war?
No.
You got, okay. So neither do I. I don't want to participate in that. So what would that be for us in the NASDAQ? What for that would be for us in the discretionary space? Wait to see the battle fight. Yeah. Wait to see those bulls and those bears fight that battle. Let's see who wins. And if the bulls win on the Qs, guys, that's most likely going to see a high base for the rest of the market, and you're going to be loving energy in a week from now. So for me, today is not about entries. Today, it's about navigation, right? You're already in the boat. You're already going across the sea. Yes, I've been watching Vikings. It's about navigation. Okay, it's about navigation. And it's about seeing how these sectors perform specifically over the next 2 days as we come in and we prepare for another week of trading next week. Some days, guys, you have throwaway Thursdays. It's okay. You have hump day Wednesday. Sometimes it's boring. Sometimes you just want to stay away. Sometimes you need to give the market a little bit of time to figure out where it wants to go.
Mhm. And I think one of those points of evaluation you need to be doing here today is to try to identify exactly where these supports are here. I see on the cues here, you've got a nice red line there at 310. Is that where you have support on the NASDAQ? Because I'd like to look at a couple of these
It
sectors and have
coincides.
you do the technicals here, Tyler. Where is support on these markets for you?
Well, I think, as I said yesterday, I think the pivot low on Tuesday, that's remember we puked Tuesday morning.
Mhm.
It was Tuesday, yeah, yeah. It was nasty. That's where you found buyers most recently, right? So most recently, you found buyers aggressively come out at Tuesday's low. If that doesn't hold, I think that's a change of character on the short-term trend for sure. So your best case here, now that we've taken out yesterday's low, I mean, you're hoping that buyers do not let this break 310. It's very hard to have any kind of constructive bullish bias at all on the NASDAQ if you take out Tuesday's lows. So I think looking intraday too would probably give you a better, cleaner view as well on this. So let's do that real quick. Oh, geez, I got to take out this after hours business. And you know what? I mean, this free fall, just looking at it this morning, this kind of looks like it did on Tuesday. Just no bid, no bid. Just kill it at the open here. But yeah, Tim, looking back, I mean, there's Tuesday's low, 311. We don't have to test it, but there's not much between here and there, so it seems like a logical magnet. And then I would hope that buyers come back and defend it, and then get some more constructive basing, get some higher lows. I mean, it just needs time. It's done some damage today. You're breaking support. There's nothing bullish about this right now.
Mhm. Mhm. No, we're just, it's like Marty the elephant coming down into the trampoline. We don't know where that exact trampoline is. Looks to be around that 310, 310 and a half mark. But when it hits there, it still has to find, and the buyers have to come back and give the
Yeah.
market a bid. And so we have to watch that price action play out, which is why we're talking about potentially like a throwaway Thursday, where it's a management day and you're assessing risk and all that kind of stuff. Obviously, the NASDAQ's the one heating up the most here, but the Russell is right there in step with it. Tyler, small caps are down, 2.8% or so. Obviously, a lot of the same type of volatility, but a very different chart in some regards because it's much higher on the chart, on the daily chart, into a high base pattern instead of below the 50-period moving average. What are you
Yeah.
seeing in small caps relative to tech?
I so this is more heavily weighted towards financials, towards energy, regional banks, the cyclical plays, the reopening plays than tech is. So naturally it is holding up better. But look, 3% is nothing to snuff at. Like 3% is a big day. So they're taking profits right now. I would be concerned if we take out Tuesday's low. I don't know that the analysis in terms of what I want to see is different. We've taken out yesterday's low. We're in a short-term downtrend on the intraday chart. Percentage-wise, I mean, we'd have to drop, guys, another $5 to get to Tuesday's lows. What, we'd be down 4 or 5%. I mean, that's going to be a pretty nasty day if we get down there. So maybe we won't. But in the next couple of days, that's got to hold, Tim. Else, I think you got to start to shift your outlook a little bit.
Yeah, price action and volatility when it starts to kick up like this. I mean, you're going to get a lot of back and forth as these intraday levels are trying to find their levels of support where buyers do want to come in and hold it. And obviously here on the intraday, see the same thing. Cash open started to sell with the broad markets. Those exact identifications are where this range is developing. Yeah.
No buyers, no green candles on a 30-minute chart. I mean, it's just all selling so far.
And just for context, give me the Dow real quick. It was just yesterday, by the way, the Dow hit an all-time high. It's funny how these markets are. Obviously, you get the headline all-time high on the Dow, then today we're down, obviously coming back, but relatively still very strong, heavy in industrials and financials and all that kind of stuff. The composition of the Dow. What you read here on the Dow?
I mean, hate to say it, but it now looks like a failed breakout from that high base. You didn't want it to come back below the breakout area. It still could be constructive. You don't want it to take out the low of the base. So breaking the 20 MA, again, kind of corresponding with Tuesday's lows. So even though the patterns are all a little bit different, Tuesday's low being the key line in the sand for me, I think is where you gotta focus. It's ugly, Tim. I mean, look, yesterday's candle, it's matching the bullishness of yesterday's candle, but to the bear side. It's not great. It's not great. We got to see where buyers come in here.
You know what the amazing thing is though, boys? If yesterday didn't happen and today didn't happen, and we're looking at the exact same price we were from 2 days ago, nobody's carrying one iota in the world.
Looking at the
Like
breakout.
nobody's caring.
Yep.
But
Oh
yet
yeah.
we all care about the two. Like I love the, oh my goodness, the market's on off for 2 hours. The end of the world is happening, right? And that's not what I'm hearing from you guys. I'm not suggesting that at all. I'm just saying it's like, if the last 48 hours didn't happen, nobody's even talking about concern in the market, but it did. We had a
Right.
breakout. It did fell. That's always going to be a little concerning, and that certainly leads to what I was talking about earlier today, in being a little bit patient, letting this type of volatility settle down. We've all been around this world a lot in our lives. I don't think any one of us love to fight on days like today.
No,
No.
it's too hard.
Yeah. It's not a fight day for your position trades, investments, those kind of things.
No,
It's a planning day. It's an assessment day. It's a breathe, go through your routine and get ready for tomorrow and get ready for next week. So you know what your moves down the road are. That's exactly what it is on a day like today. By the way, out of all the weakness across the indexes, and Matt, do you have anything else on broad index before we go to commodities here? Okay. Crude oil is still up. So not everything is selling off today here. Actually, crude oil is up just a hair. CL contract, if you can, has been behind the backs of, the strength in energy as well recently. Now just a doji, but not participating in the broad sell-off in the market. Tyler, what are you seeing in the chart there?
Strength, man. So much strength. So impressive. To your earlier point, if you're building a plan on what to do, you're looking at these strong areas. You're making a shopping list of dips to buy. Knowing our luck, Tim, you'll get one red bar in the energy and financial sector, and they'll go right back up. So it wouldn't be a bad thing if we got a couple of red bars in some of those areas. And so there's not an entry here in crude oil, but you just got to sit back and be impressed by the relative strength, not budging an inch while everything else is in free fall, which tells you, the narrative's not dead, right? This whole idea of energy and oil being strong hasn't changed a bit. And so if anything, it just makes me like energy even better, to be honest.
The only thing that's happening in energy is it's just overextended in the short term.
Yeah.
I mean, do you guys have a different read than that? Because I don't.
No, just impressed by the strength.
So what about finance?
Ditto.
Like same conversation. I'm not concerned in any capacity here. And so even industrials, guys, I know industrials certainly isn't as strong as finance and energy here, but it's running on the same type of theme, right? Especially over the last couple weeks. And so industrials just broke out. We haven't even tested the breakout channel in industrials yet, guys.
Yeah.
I mean, you're completely overextended in finance and energy. You haven't tested the breakout channel in industrials yet. And I know the NASDAQ and the discretionary space are concerning. My whole thing is I'm not concerned yet, broadly speaking.
Well, would taking out Tuesday's low be a signal
now,
for you?
If the NASDAQ cuts out 310, yeah, I mean, we would obviously look to downgrade the marketplace, but that downgrade wouldn't be a massive downgrade of 10 to 15 points, right? We wouldn't be looking at that because, again, if it's broadly based, if the sell-off is broadly based, then you have a little bit more concern there. Yeah. But when you're looking at the marketplace here, and let's do a quick sector roundup very quickly.
Yep.
When you're looking at, say, basic materials, okay, let's just do a quick ranking. Okay, would you be upgrading or downgrading basic materials coming into next week?
It's probably a maintainer.
It's a maintenance.
Yeah, but
it's a maintenance. You broke out.
Mm-hmm.
You broke out, and we probably would have upgraded, but now with the sell-off, we'll have to see tomorrow.
Mm-hmm.
It's probably a maintenance, right?
Mm-hmm.
What about energy? The only reason energy will not get upgraded is because it's overextended. And even at that, it still might get upgraded because of the ridiculous strength in it, right?
It's either
Okay.
an up or a maintain. Yeah.
And again, the only reason it would be a maintain is simply because we do take into account where the chart is relative to support and resistance, and we do take into account technical analysis in our rankings. If you're treating this fundamentally, you're upgrading. Period. End of sentence. If you're treating it, if you use your little technical tricks, yeah, it might be a maintenance given the fact that it's had so much strength recently, right? What about obviously finance? Same type of conversation here, right? Exact same type of conversation. You know, what about comms? I would say we downgraded last week based on the overextended nature, right? And this week you've had a little bit of a mixed data. We were fairly strong. I could see a 5-point downgrade in communications.
Yeah.
I mean, we got to see tomorrow. What do you got, Ty?
Well, I was gonna say if it can hold above the pivot, then you got a little bit stronger case for not being overly aggressive and downgrading. It takes out that it kind of forces your hand, right?
Well, and we also did downgrade last week because of the overextended nature, and we thought that the other areas of the market were going to play a little bit of a catch up, and it did, and yet still it has not violated. Right. Think about this: with all the news we're seeing out there today, right? And just wait till the market starts selling off a little bit more. Wait till the bloodbath headlines later on tonight, right? Yeah. But yet, communications has not even broken a short-term support yet. Right, energy hasn't even tested a short-term support. Industrials hasn't even tested the breakout channel yet. What about let's take a look at technology and discretionary. Obviously, both of these two areas will be looked to downgrade this week, no doubt about that. We will look to downgrade, and it's just a matter of how aggressive do we want to be with that downgrade based on where we kind of finish up the trading week here tomorrow. So certainly going to see some downgrades in tech and discretionary. What about your defensive sectors, staples, utilities, and real estate? Staples is going to be a 50-50 burger. Nothing to see here.
No.
It's been boring. There's nothing changing in Staples this week. What about real estate? Probably
nasty today.
Probably a 5-point downgrade.
Yeah.
Right. Probably a 5-point downgrade. What about utilities? Definitely a 10-point downgrade.
Definitely
a 10-point downgrade. All right. So what about let's take a look quickly at healthcare. Okay, probably a downgrade.
Yep.
Right, probably a downgrade. All right, and what about industrials?
If the breakout holds, I think it's an upgrade.
Yeah, if the breakout holds, it's an upgrade. All right, so in the Tackle Train Scout Report meeting tomorrow, where we do all of our newsletter and all of our rankings, yeah, we're going to downgrade technology, discretionary, two areas in the market that have been ridiculously powerful for the last 10 years, but obviously have some valuation concerns given what has happened in the past year. We've seen that data start to play out in earnings numbers and earnings performance based on those numbers. We're going to downgrade staples. We're going to downgrade real estate. We're going to downgrade utilities. What's the commonality in all those three sectors? Nobody cares about them anyways.
Yeah, they've been completely out of the limelight.
Nobody talks about them. Yeah. Nobody cares about them in any capacity. So, and what are we looking to upgrade?
Energy, financials,
industrials. And so, yeah, we can get caught up. And my whole point is this: we can get caught up in the random volatility of the last 2 hours, or we can focus on trends and support and resistance. And I do think focusing on trends and support and resistance is more powerful.
I agree. Yeah, I agree. Wise words, and exactly where my head's at as well. Love the sector roundup. Let's flash through the rest of the commodity market if we can as we're moving through the show. We're going to get to some earnings companies here in just a bit. I also want to talk a little bit about Bitcoin as well. Coinbase is filing for a direct listing. We'll get to that news in a second. Oil we look at gold real quick, taking it on the chin here today, pushing towards support. Obviously that pivot is in question here. Tyler, what do you see in the chart?
Same old, another failed rally, just like we said yesterday. The trend continues, right? The trend continues. So I was taught the more times you test a level, the more significant it becomes, but the weaker it becomes. So it's just continues to test buyers' resolve. Are you gonna save me? 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 Eventually, buyers are like, no, man, I bought everything I wanted. I got nothing left. So you chew through that demand and support breaks. So the more times it's tested, the weaker it becomes. You also have lower highs, right? And so each bounce has been weaker and weaker, creating a descending channel, or sorry, a descending trend line, descending triangle. There we go. Descending triangle. It ain't bullish, guys. It ain't bullish. I think the bearish technicals continue, and yeah, this would be a downgrade if it takes out this support level. It's on the verge of a downgrade for this week for sure.
Mm-hmm. Yeah, Matt, anything you want to add on gold?
Yeah, it's got to learn to dance in that corner a little better.
Mm-hmm.
Can't get out of the corner, Tim.
Cannot.
Said it yesterday. Can't get out of the corner. Silver got out of the corner a little bit. Gold can't get out of the corner. And like Tyler said, the more times it gets hit, the more relevance that level becomes, but ultimately the weaker it becomes as well. And
Yep.
you get into the corner like that, it is really hard to come out. So yeah, I do think there is concern here on gold, and obviously this thing could break, and 1650, 1600, it's not out of the woodworks if that happens.
Yeah, I agree. Dollar next here, if we can. Obviously, some weakness here in the dollar as well, coming back below the moving averages, trend lines. Matt, I know that Jerome Powell had some commentary about reiterating their pledge to having so much money out there for quantitative easing, all that kind of stuff. Dollar's not really been interesting to me as it's been chopping back and forth for a month, but are you seeing anything here that grabs your attention in the dollar? Anything you want to talk about? Dollar.
No.
Boring. All right, Bitcoin, let's do it. Bitcoin actually was holding up pretty well relative to market risk here today. They've been correlated a little bit recently with, stocks selling. Sometimes Bitcoin sell, but it's not doing that here. In fact, it's holding after that 2-day sell-off back up at 50K. A couple of stories around Bitcoin. Coinbase is filing for a direct listing on the NASDAQ.
Good for Coinbase.
Bypassing the traditional IPO process. They're not going through a SPAC process. Obviously, they don't need to do that right now. They're valued at $100 billion, by the way, and they've got all kinds of speculation around what this company's going to be pricing at.
Yeah, they're a little bigger than that SPAC money, Tim.
That's right. That's exactly right. Might be one of the biggest tech IPOs since Facebook, guys. It's an exciting one. I know we had Airbnb last year.
If it's $100 billion, it's bigger than Facebook.
It'll be a huge one when it does it. But Bitcoin here is holding. Matt, impressive. You got to give it to and it's not bears that were selling it the other day. Bulls were taking profit. You've been talking about bull on bull crime here for a long time. What are you seeing in this chart, Matt?
I'm not sure anybody shorts Bitcoin. Who shorts Bitcoin?
Who's fading this? I don't know.
Like anybody?
Yeah.
Those guys that got blown out of GME.
Maybe the ones who are short.
They're back though.
Their new target. Yep.
They're back. No, I honestly don't think there's a technical read here on Bitcoin. It's very, very news driven right now.
Mm-hmm. Let's get into stock talk. You bring up GME. I want to talk about it.
I do think the Coinbase IPO is really enticing.
Oh, I'll be so excited about it. It will be on everybody's watch list.
It's going to be completely overvalued, and you will not be able to touch it. But I do look forward to trading Coinbase and investing in Coinbase.
Yep,
that's what I was going to say. $100 billion. Won't there just be more competition? I mean, they have first mover advantage, but
that's a big advantage, though. I mean, think about it, Ty. Because that first mover advantage, that made Netflix, and why Viacom is trying so hard to be Netflix over the next decade.
Yeah.
Right. That first mover status is what made Apple the juggernaut that Apple became. And everybody, yes, it creates an industry that everybody can kind of nickel and dime. And that first mover status made Nike the juggernaut that Nike became. And how many challengers have came up to Nike in the last 35 years and got blasted?
Yeah.
Right. So that first status thing is a very important thing, though.
So here's the other thing I heard, and I don't know if this is true. How expensive is it on Coinbase to like, what's the transaction cost? Somebody told me it was more expensive than most other avenues for buying.
Depends on if you're trading or investing. So they have two different platforms, and I'm not going to get into the detail, but essentially it depends on if you're trading and investing.
Okay.
If you move money into their trading platform, it's actually very efficient. If you're just buying in bulk, I mean, there's transaction costs there. There absolutely is. But you're not think of Coinbase itself as like a savings account, Tyler.
Yeah, that's how I see it. You park money.
They park it there. There's 43 million users on the platform. They mostly trade Bitcoin and Ethereum, but the ones who want to trade, they move over to the trading platform and they have a secondary kind of thing there. You'd have to kind of go through it, but yep. Yeah. It's there, but 43 million people are already using that service. They do have that first one there. It's going to be an interesting IPO when it does happen. Let's move into stock talk. You guys brought up GME, talking a little bit here, and it's a good question. What in the world is going on here? Obviously, we did talk a little bit about this just right out the gate. There was some CFO, that just said he was resigning in March and that stock started taking off. That's obviously algorithms, in my opinion, institutions that are doing it.
It's not debatable.
But the stock has moved from $45 a share, guys, to 170 here in 2 days. Is this story rising from the dead, like it was, buried 6 feet under, and now it's crawling out of its own grave here?
The only thing I can see is the Undertaker coming out of his coffin in a WWE event right now. That's the only thing I can see with GameStop. And I don't have a technical read. Obviously, the fundamental read is completely whatever anybody believes in, right? If you believe in Santa Claus, that's up to you. But I will say this about GameStop: those hedge funds had all the ability in the world, and yes, I do believe there was some cheating going on, to get out of their short positions. And if any hedge fund was still in that short position and they got blasted on this movement, which was an algorithm-driven movement on a headline, if they get blasted by this movement, I hope every consumer in the world will unite and cry a little tear for them. And I also hope they lose all of their money and their generations lose all of their money as well, because they will deserve to lose everything. You had the entire system cheat for you to get out of a position so you wouldn't go bankrupt. And if you didn't take that gift, the ultimate gift of the trading gods, you should get out of this industry, and you should be forced to get out of this industry.
You had 3 weeks to exit. If you're still short GameStop, I'm 100% agreeing with Matt here, Tyler. If you were the firm that saw the whole thing happen, you wrote it out, you added capital, you got the gift, and you didn't exit, this is your own fault. Here.
It wasn't a gift. They cheated for you.
They did cheat.
They cheated for you.
Yep.
And if you did not get out of your position when you literally had the system cheat for you, oh man. I've been watching a lot of Vikings, so you know my response.
Do you know what the short interest is on this?
35% is what I read yesterday.
Still?
Yeah, still.
It
still
should be zero.
Wow.
Yeah.
I think what y'all said a couple days ago is someone needs to grab some of those hedge fund managers and teach them technical analysis.
Well, the problem is Jay Powell.
They were hoping for
$5
again. They were hoping for $5 again. The ones that are still in.
It doesn't matter what they were
hoping for.
I
know.
Like,
we agree because we look at the technical analysis. That's what I'm saying. They just need to learn technical analysis.
No. My take has nothing to do with technical analysis at all. The entire financial system cheated for a few hedge funds. They were given a gift, not by the trading gods or the technical universe, but by their buddies at the top end of our industry. And if they did not get out and take that gift, they deserve to lose all of their money, and their generations deserve to lose all of their money, and we should remove them from America. Again, I've been watching Vikings. My responses are a little bit more radical.
The only technical analysis I was talking about is that little doji party it's had for the past 2 weeks. Like
that was the cheating. That was the gift. That was the cheating.
That was the cheating.
That was the cheating. Exactly. Yeah.
I don't know. Like literally.
Do you feel bad if you're the CFO today? Like
I mean, at what point, like the entire world says you're an idiot?
You announce your
I feel like I don't know who Jim Bell is, but I want to give him a hug.
Too, Jim.
Like I want to find Jim Bell and be like, Jim, buddy, the market is like $12 billion wasn't made because, like, despite you. No, it wasn't you. This was algorithms, Jim.
Do you know what though? If he's taking GameStop shares with him, he's like, oh my gosh, I thought I had this much in my
Come on, we've seen this before though. CEO, CFO, CIO, name your C leaves, the market bumps, right?
Mm-hmm.
But we usually see like a 1% to 2% bump. GameStop doubled in price. I mean, I just feel bad for Jim. I don't even know who he is. I feel bad for him. He feels bad about himself.
He probably still has stock.
Oh, he probably walked away with $1 billion, but like, I still feel bad because it's just cash, and he probably feels really down about himself.
Yeah.
Well, like, what's the market cap? It went up today. You know,
I don't know.
it's like you were worth negative $10 billion to our company. So you leave, and bada bing, bada boom. Yeah.
It's all fuzzy math. It doesn't matter what the market cap
It's all fairy tales, but
it doesn't mean anything right now. But it's an incredible story. Obviously,
have you ever seen a more volatile response to a CFO leaving?
Never. No, Jim, it's okay.
No.
Jim, take a walk. It's not your fault. Cash
Jim,
it.
call me.
You're good to go.
I'll talk to you, bro.
All right. I got nothing else on this craziness, but it is a popcorn type of game.
Tim, I will tell you, my response was the same as yours. Like, when I saw the response, I was like, oh man, Jim Bell must feel real bad right now.
Oh, that's funny. I do want to get to earnings roundup here next, if we can. Matty, you know, I know you found a bunch of numbers, depending on which ones you want to start with.
We did. Yep. We did. We'll get through a couple of them here very quickly. We also had a few economic reports today. GDP, preliminary GDP came in at 4.1 versus the 4.0 from it was last time. Remember, in the GDP report in America, we have the advanced, we have the preliminary, and then you have the final cut. Well, the advanced was 4, preliminary was revised upwards to 4.1, but the expectation was 4.2. So a little bit of nothing to see here. Initial claims.
What quarter, Matt, was that?
Fourth quarter.
That's pretty good, right? But that's because we of the base we started with, right?
It's better than expected.
The V-shaped thing. Yeah.
It's better. It was better than what we anticipated at 4%. I believe it was 3.2 was the expectation last quarter. So we are improving from the GDP perspective a little bit faster than we anticipated. But yes, if we can average 4%, everybody in America is going to retire. Unfortunately, we average about 1.2%. 1.8%, which is less than inflation. And so we'll see what happens post-pandemic. But here's the problem, guys. You're never in America going to average 4% GDP again. It's just not going to happen. Just get it out of your mindset. It's never going to occur again. And the reason is there's just way too much money at the top of the market. It's hard to get that going to that degree. Mm-hmm. We just don't utilize the money to do it.
I read I saw a couple of forecasts for this year, like 7%. I even saw one that was 8%. What's your forecast for 2021?
2021, if you get into 8%, I mean, that's really, really, really good. I don't believe we're going to get there. I just don't. I think you're going to have some really, really tough first quarter type stuff. And so by the first quarter, it's going to kind of set that stage. But we had some weather-related problems in the first quarter. A lot of times that's going to stall supply chains. We already have some supply chain problems. And so it's going to be really dependent on what we do in the first quarter, but there are some problems there. I would be a little surprised if we get into the 7 to 8%. Now, again, that wouldn't be unheard of coming out of the pandemic. What I'm talking about is averaging a GDP in an economic system. I'm not talking about, right now. So for me, if you got into 8% GDP by the end of the year, the recovery was strong. The pandemic, the distribution of the vaccine went well, and they figured out the supply chain madness that's happening. Can they do it? Certainly. Will they do it? I doubt it.
Mm-hmm. Mm-hmm.
Got it.
Okay.
All right. Regarding earnings, very quickly, let's start with, let's start with the best of the raw numbers at the top of the market. Let's start with NVDA, please. Now, Ty, I'm going to give numbers. You give me your technical breakdown if you don't mind. Okay. NVIDIA getting caught up a little bit in the madness here today as well. I actually took their raw numbers as really, really positive. Typically in a tech stock, you want to see a beat, but you'd like to see a really good beat and a really good beat in the tech. And you know, Nvidia only got it, they only had like the beat in the beat, not the really good beat in the beat. But they did come in at 310 versus the 280 on EPS numbers, a nice 10% beat on EPS numbers. Revenue came in slightly about a 4% beat, 5 billion versus expectation of 4.8 billion. Revenue numbers fine, who cares? EPS numbers really decent. Revenue did increase by 61% year over year. Those numbers are typically really good numbers for Nvidia here. But the story for me, and I know we always talk about the future, sometimes jokingly, sometimes not, but the raising of the guidance here on Nvidia was really important to me. And I know the market is responding down, but I do believe Nvidia is getting caught up in a little bit of the market sell-off in the tech area specifically. But they raised guidance pretty aggressively here, guys, both on the EPS side and on the revenue side by 20%. So a 10% beat on EPS numbers, 4% beat on revenue numbers, 20% increase in both revenue and EPS guidance for 2021. I'm taking this as a very positive report from a raw numbers perspective. Ty, let's take a look at the price action here and give me your read.
Yeah. So one thing I was just thinking is, look, if the NASDAQ does just get torched and we get a 10% correction or something, isn't the benefit that you get these really good companies like NVIDIA?
If you get a 10% correction, NVIDIA is sitting at the 200-day moving average, and you absolutely will be looking at it at that point.
Yes.
Yeah. Yeah. So I mean, that's the thing is with every crash, there's a silver lining. You know, it's always what comes next, and it's the people that get destroyed during the downturn that don't have the emotional capital as well as maybe the financial capital to take advantage. So I think that's an encouraging note with if this
which
gets
one
out of
do you
hand.
think it is, the first or the second?
More often than not, it's the first.
Is it the emotional or is it the financial wherewithal? Because I think it's the emotional side of it.
Well, the thing is if you don't
when they
have
get
the
hit
first,
like this, yeah.
If you don't have the first, it doesn't matter if you have the second, right?
Yeah, that's true. Because you're just gonna lose that too.
Well, meaning if you've got the money, but you're not emotionally there, you're not going to pull the trigger anyways, right?
Yeah.
So you have to have your wits about you to be able to take advantage of it. But that is one reason why I think people like to have a certain amount of the portfolio in cash and or get defensive early on when the market turns nasty, so that you have the wherewithal to put money to work if you get a correction or something. But anyways, that thought just came to mind. But,
and I do think, and I don't think you're calling for a 10% correction, just saying hypothetically, if we do get one, that is an opportunity to pick up really good companies.
yes.
To me, it's not an opportunity to reset something you technically missed out on just because it's down 10%, because all those technical patterns are destroyed in that environment.
It's a more longer term thing, right?
Yes, yeah, exactly.
Yes.
Yeah.
So the context is you're speaking not really my language, but kind of long term. You're saying, look, they're killing it. Chip stocks are great. NVIDIA's a leader. It's getting beat up. They had great numbers. That's the kind of crap where it's like eventually this thing goes back up if it maintains that trend. And so,
well, and that's my take here today. Right,
Yeah.
I'm seeing the market sell off on Nvidia here today. Little bit concerning, violating the 50-day moving average, coming back down into that wide range neutrality that you had for 6 months. But the raw numbers were really good, and we all know the quality of Nvidia.
It's one of the
guys,
best companies,
right?
Yeah.
I mean, we don't need to talk about the fundamental nature of this company. It's a really healthy company. But from a raw numbers perspective, though, there's no concern here. It was a really good report with an increase in guidance.
And there was some interesting commentary from the CEO as well, talking a little bit about some of the moves they're going to make in the future, because some of the shortage for their own particular chips, NVIDIA makes gaming chips mostly. They also got into artificial intelligence chips. They have a big surge in revenue also from their data services, I believe, but they're going into crypto chips in March. And basically what he was citing, and I don't know the mechanics. I'm not a mechanical engineer. I'm not that type of person, but crypto chips, I guess, can be simpler than gaming chips, Matt. So they can kind of mass produce those. They don't expect a huge revenue surge, but they're going to be able to get those out there a little faster, keep the other chips on the shelf for other people. So they were talking a little bit about that supply shortage and why. And they cited that the crypto miners were buying their gaming chips the last 6 months. So, I mean, and
that's what I would like to understand, because the way crypto's farmed on the internet, is there a substantial difference in energy output using a gaming chip versus a non-gaming chip? I guess I don't.
I'm curious too.
I'm not the
because
expert there.
I was
so
reading.
I
I
don't know.
I read the CEO commentary, and he basically was saying we can make a much simpler, cheaper chip for the crypto miners.
Okay, simpler, cheaper, fantastic. I'm looking for, does it use less energy?
Yeah, that would be. I would love to know that. Yeah, I don't know that part of it, but it's interesting the moves they're making. You know, it's obviously a great company. They continue.
It sparks my interest. It just, yeah, my curiosity sparked there. I'd
Do
like
you
to
think-
look into it.
Do you think if they put 1% of their cash in Bitcoin, this thing would have been up 7% today?
I got no take on that.
No, none. All right. Next, what do we got? Viacom, maybe. Got a couple other ones.
Let's go with Viacom, Tim. I got raw numbers. I got $1.40 in with Viacom on my sources were kind of mixed today, Tim. So help me out a little bit on Viacom.
I had $1.04 on 6.9.
No, I do have it $1.04 versus 101, and I do have it 6.9 versus 7. So I got a very mixed, lukewarm report coming out of Viacom, but I didn't have anything else here, T. I know you do. Now they specifically talked about the need, and again, this is subjective coming from their end because they're one of the 5th, 6th, 7th. They're not the 1s, 2, 3, or 4. But they talked and they talked about the consumer demand for subscription and streaming services from an entertainment perspective. And there's been a lot of concern over the last 10 years, really, but it's been building that, okay, we have your Netflix, kind of like that first starter, right? That leader in the pack. We have your Netflix, you have your Amazon Prime, you have your Disney Plus, you have those core that everybody gets, right? Everybody has Disney, everybody has Netflix, everybody has Amazon Prime. But back 5 years ago, that wasn't the case. You had 1 or 2 of them, right? And then a couple years ago, no, we'll have 3. We can fit 3 subscriptions into our consumer wallets, right? Or our family budget to a certain extent. And then last year with the pandemic, that unleashed that a little bit to where you, man, 4 or 5 subscriptions, right? So just in the last 5 years, guys, we went from 1 to 2 subscriptions to now on average somewhere around that 3 to 4, with a lot of people getting into 4 and 5. And what was interesting out of Viacom was they were talking about Paramount and putting their subscription streaming software out there. And right now, how many millions do they have right now, Tim? Like
30 million,
30 something, right? But their projections to get into the 70 to 75 by 23, 24, you know, so, and their entire argument, and it's an argument that I do think people have to make for themselves to a certain extent, because I don't see people canceling Netflix to get Viacom.
Nope, it's either you add it or
right.
you don't.
I don't see people canceling Amazon Prime to get Viacom. I don't see people saying, I don't want to watch WandaVision. I don't want to watch The Mandalorian because I want to get Paramount. Like, I don't see that. But what Viacom's argument is that they're going to be that 4th or that 5th choice in the consumer priority list, and that consumers will have the thirst and the demand to fit 5 or 6 subscriptions as they get into 2024. And if you buy that argument, that consumers over time will have more subscription streaming entertainment services, you know, Viacom's kind of in that second tier, right? I don't like, if you tiered this, right? You have tier 1, tier 2, tier 3, Amazon, HBO, HBO Max, Amazon, HBO, Netflix, and Disney, right? Yeah, those. But I would put even HBO slightly under those. But then you have your, you know, Viacoms and the HBOs and whatnot right there in that second tier. Who can lead that second tier is important, guys. And Viacom is saying, we can lead that second tier. Where Viacom's not coming out today and saying, we can be Netflix. We're going to beat Disney. That's not what they're saying. They're saying we can be a quarter of Disney. And if that's good enough for you, then give us your money. And if that is, I think Viacom's a good stock.
It's a great stock long term in terms of that anticipation, the growth. It's all about the future. Today's report was a nothing burger in that regard.
Oh, no. It's all about it. Today's report is all about the argument. And if you buy into that argument that consumers can fit 5 subscription services from an entertainment perspective in their family budget, that's the argument for Viacom.
Yep. I agree. Yeah, that's all I've got on it as well. I mean, there's some interesting titles in there. They've got the MTV, Nickelodeon, Comedy Central, BET, CBS Sports. There's NFL games they're going to stream. So there's some content there that I think will grab consumers' attention. Let's see if they can execute. That's really what it comes down to. Yeah.
I'll buy them if they take over DirecTV and take over Sunday Ticket.
Dude, that would be huge, obviously, if they could do that.
Not going to happen
as well.
But
yeah,
no. And again, it's just a matter of Viacom's never going to be Netflix.
No.
You cannot anticipate that. That's never going to happen.
Yeah,
They're never going to be Disney. They're never going to be Amazon. That's not in the cards. They are late to this party.
Mm-hmm.
But can they play a little catch up? And over the at least in the past, since the first of this year, they're doing it aggressive. Nice little tackle 25 stock too.
Yeah, I like the stock. All right, a couple other ones, Matt. Any others caught your attention? We can wrap.
Let's do rapid fire through a couple here. Best Buy BBY, please. Best Buy getting absolutely hammered on the day, fighting for a 200-day support bounce. That's kind of like that. That's a fairly significant battle, and Ty, I want to have you break it down. Technically, you do have a support level at $100 right underneath that, but 200-day moving average battles. Let's break that down. Best Buy comes out today, very lukewarm report, 348 versus the 346, so a slight beat on EPS, slight miss on revenue, 16.9 versus the 17.2 billion expectation, revenue 12.5% year over year. Again, like I said earlier this week, retail stores, same store metrics are very important. Same store sales on Best Buy, unlike Lowe's, that actually were very, very good on Lowe's, came in like 28% versus the expectation of 22. Not similar companies, just giving you a little bit of a cross comparison. Best Buy comes in at 12.6% increasing growth or increasing revenue on same store sales. Expectation was 14.6. That's a pretty substantial meet, showing a little bit of growth concerns here for Best Buy. Tyler, the report was sold as it should have been sold. There is concern here with their same stores sales numbers, and quite frankly, EPS numbers were boring and revenue numbers were fairly boring as well. What's your read technically here?
It's going to take some time. This needs time. This is a nasty candle. Anytime I see a wick as big as the daily bar, it makes me wonder if it was a bad tick or if it
bad data
point.
Up
yeah.
there.
Yeah.
It gapped down, Ty.
Yeah. Well, so let's.
And then ran, but.
Yeah. Let me go. Am I seeing this right?
You're looking at IWM.
Dude, my charts are all jacked today. My apologies. Deep.
It gapped down.
That's nasty. What is that, a conference call or whatever?
I don't know.
Was it? Anyways, regardless, the fact that it came all the way back down, that's messy. It's messy. So,
but that's still a weird tick, Ty, because then, what time is that at? It climbed up. No,
7:30.
It was.
Open.
It's accurate.
Yeah, it's just it's uncommon, which is why we're kind of thrown for a loop. It's not common for that type of volatility, which makes me wonder or think that
there is a bad data point. That candle's weird.
On
Best Buy, there is a bad tick on there. The open should be at the top of the bar.
Oh, okay. All right.
What time did that occur at? Oh, it was just so quick. Okay, I see what happened. It was just so quick on the cash open.
Yeah.
Yeah.
Well, so regardless, the battle is being won now, and what matters is now. I mean, they faded the crap out of it. So, it's a stay away. I mean, first of all, it's hard to short it when it's already down 10%. Second of all, you want to step up and buy this. You have no evidence yet of buyers. So this is a stay away for me.
I mean, technically getting absolutely butchered, fighting against the 200-day moving average on an earnings report that obviously should have been sold.
Yeah.
Don't fight that war.
Yep. Easier trades. Just give it time. If you like it at lower prices, fine.
If you like Best Buy, go to a store, buy something, and make yourself feel better, but not the stock.
Agreed.
All right.
Agreed.
Next, let's go to VIPS. VIPS.
Go get an NVIDIA gaming chip
Go
and buy
get-
NVIDIA stock instead.
No doubt. VIPS here comes in at 54 cents a share versus the expectation of 49. Revenue came in at 5.5 versus 5.2. Revenue increased 30.2% year over year. Decent beat, not great. Maintain price. Technically here though, what do you see, Ty?
This is nice. The gap wasn't crazy, so I didn't throw a wrench into the chart. It was bullish coming into the announcement. Like, this is what you want to see on these companies that have run into earnings, right? You want to see the earnings support the higher stock price.
Yep.
And then some. So well done on VIPS. I mean, am I buying it here? I don't know that there's a swing trade setup, but it does reaffirm the uptrend and the strength in the bulls and tells me the trend could continue for the month to come.
Yeah, I see that too on some of these high flying growth type stocks like VIPS, Ty. When you see an earnings report after a run up from 20 to 38,
Almost double, yeah.
I mean,
Almost
just a very impressive run for VIPS, no doubt about that. But you just want to see it be able to hold its head against the high tide.
Yep.
Right. That's
Yep.
all you want to see. You're navigating that earnings report. That's it.
Yep.
Just get rid of the landmine. Now we can move on again. So that's kind of how I saw it as well. And honestly, their numbers, they weren't great, and they certainly don't support a 90% uptick in the quarter. But again, you remove the event from the equation. Now you treat it technically, but I think that's how you treat VIPs all the time, is technically.
Yep.
Yep. All right, let's move on to DPZ. DPZ.
Yikes.
Ew.
Dominoes. Guys, what is going on here? Dominoes doesn't do this.
Mm-mm.
This is not the Dominoes that we have grown to love forever. Dominoes doesn't do this.
Nope.
This is a company that does nothing but go up. Look at that. Look at the long-term chart.
That 15, 20-year chart is incredible.
Oh man, just sexy.
Yes.
Look at that thing. But it is obviously very concerning here. Very concerning here on Dominoes. And not only it wasn't just the gap down, guys. It is Dominoes is just, I mean, that parade is over completely, 100%. It's been over for a long time. The shine has been removed. And obviously people are not buying enough pizza from Domino's because they missed on EPS and they came in line on revenue. And that's just not typical for Domino's. Domino's has a very rich track record of beating and price appreciation. And, funny question, which one has greater price appreciation? Greater price appreciation from the IPO? Domino's, Google, Facebook, which one?
It's Domino's.
I'll go Tesla.
It's Domino's.
It's Domino's.
Yeah.
That's amazing to me. Truly is amazing to me. But no, Domino's, honestly, guys, they missed. They missed on EPS, and they need to sell more pizzas.
Mm-hmm.
It really is as simple as that. They just did not come in on the sell side.
Maybe
I don't have a
second quarter in a row that got
Yeah.
smoked on earnings. So it's a stay away from a technical perspective.
How do you
for them.
not sell pizzas when people are staying at home?
Maybe they're not staying at home as much, bud.
Well,
Maybe they're tired of delivery. I don't know, but listen, that's a nasty gap.
I'm just saying, like in the delivery world today, how are you not selling pizzas to people at home?
Well,
it could just be a matter of expectations got too high.
That's probably true. Yeah.
Well, and think about it, guys. Just look at your chart. In the pandemic, 307, 299, 249, 346. You just reported your best number that you've done in the last year, and you got butchered based on that. Tyler's accurate. It's expectation. The expectation has been building. Domino's hasn't been participating. So sell more pizzas, Domino's. Is Domino's pizza good?
It's great, man.
It's all right. I like it.
I like Domino's.
And I thought I liked it too, but I haven't had it for a long time because my wife hates it.
Mm-hmm.
So so it's still good though, right?
I enjoy a Domino's pizza delivery.
Okay.
Yeah,
I
for
thought
sure.
it was good.
Everybody's got their little favorite of these, dirty pizza chains, Pizza Hut, Domino's, all that kind of stuff. I think Domino's is great.
What's the best dirty pizza chain? That's a great question.
Yeah.
It ain't Pizza Hut, I'll tell you that. This is way
Don't
better.
tell my wife
It was
that.
when you were 8.
We have a fight in our house. We have this argument in our house all the time. I'm a Domino's guy. She's Pizza Hut. So
yeah, I can't stand Pizza Hut.
Dude,
Can't do it.
I love your wife. I'm not gonna say your wife is an angel and a saint, and no, your wife's right. You're wrong. Make sure she watches the halftime report about that.
I will. Okay. I will relay that message.
Thank you.
All right. Any more roundup, brother?
You know what? That's all I had for today on earnings roundup, Tim. So yeah.
Couple of quick last notes. Twitter is having their very first investor day today.
They're also breaking out and volatile.
Yeah.
Take a look at that chart.
TWTR. Here's the thing. They've never actually communicated with the analyst in an official way like this. So they're having the first investor day. They also filed with the SEC for their revenue projections. This isn't just Jack Dorsey talking out loud. He came out and said that they believe they're going to double their revenue and increase their active users on their platform that are monetizable up to 315 million by 2023. TWTR actually, Ty, sorry. And
he just heard Jack Dorsey, and so he went to one of the companies.
I guessed.
Yeah. 50-50 chance there.
Yeah. Is there anything here, guys? I mean, obviously,
Twitter's learning how to play this game.
Drove the breakout.
Come out on a random day and say, you know what? We came out with new revenue goals. Mm-hmm. What are they based on? Just our internal goals.
Mm-hmm.
We had a good meeting last night.
What metrics do you guys use? We just think we're going to double our revenue growth by 2023. Well, why do you think you're going to get that? It's Twitter. Well, but how are you going to get more visibility? You know what? The meeting was really good.
There was donuts. We had good coffee.
We had some coffee, some donuts. Sally had a birthday cake. It's fantastic.
This is a tough bar. This is a tough bar to trade. I mean, come on. Although I don't know, this isn't a trade that this is not my type of setup, but it's tough day to try to break out with the market getting whacked.
It is a tough day to break out, but couldn't you see a scenario where if the NASDAQ does hold its support, Twitter holds 75?
It's a leader. Yeah.
Yep. So I do think it's a tough day for Twitter, but that break is 75 and then the test is 75 today.
Mm-hmm. Mm-hmm.
I do think we'll have a conversation on it tomorrow if it holds 75.
Yep.
Yeah.
I agree.
Impressive strength.
And here's the amazing thing, guys. If it runs to 85 tomorrow, which I don't think is going to happen, I'm not saying it will.
Mm-hmm.
We'll say no.
That's
because it ran too hard.
Mm-hmm.
Yeah.
Okay. And if it breaks 75, we'll say no because it broke pattern. Literally, it's got to hang out.
Yeah.
It's got to go to that same meeting they had last night where they figured out how to double their revenue growth. They just got to have another party tonight.
Let's have a doji party, Jack. Yeah, let's have a doji party. And then that's the only corporate news item I had outside of upgrade downgrade. I'm going to play a little game of if you agree or disagree. And Cody, I'll bring you in on this one as well.
Rapid fire.
We'll go around the room. Not everybody on every stock. I'll just pick somebody and I'll say agree or disagree. If anybody else has a big takeaway, obviously come on in and share that with us. But let's start with Disney. And I'm going to start with Tyler on Disney.
Yep.
Disney caught an upgrade here, price target upgrade from Citigroup to $230 from $205. Tyler, obviously we're hesitation candle here. It was looking really good on a breakout, still in a beautiful uptrend with higher high, higher low scenario. Do you agree with the upgrade on the price to 230 on Disney?
Of course. Hey, take it to 430. I don't care. Yes, it's a great company, great chart. And their hand is forced. They're like, look, it just went from 120 to 200. Let's get in front of this and upgrade it ahead of time. Sure.
Pretty easy price upgrade as well.
Yep.
I agree with this one. This one might be a little bit tougher here. Square SQ will go to another Jack Dorsey company from the one we just talked about on Twitter. Matt, you analyzed the earnings report and whatnot. Guggenheim upgraded Square to a buy from neutral. They liked the move on earnings and things that are happened. Do you agree that Square is a buy?
Oh, the pause.
Well, if they already had a buy and they went to a strong buy, the answer is an automatic no. Like an automatic no. But they went from neutral to buy.
Why were they new? How long have they been neutral?
Neutral for how long?
And that's the hesitation I have here, because you've been neutral on Square in an environment where Square went up 980%.
Yep.
And I'm not just throwing that number out there. It went up gangbusters, right? From the low price of 32 to 283, guys. And you were neutral in that?
At least
so that's where the hesitation was. It's like, how much evidence do you need there?
They should put bands around their analysts. They say, look, we'll give you 100% up, 50% down. Once it moves outside of that range, you have to change.
If I were to rank Square clean, I would have it as a slight buy. Given the volatility right now, I would have it. So I'd have to agree. I don't know why they were neutral though.
They've been neutral for about a year, by the way, Tyler. So at least that amount of like, so they missed out on this entire trend. Late to the party there, Guggenheim. Late to the party.
And again, not every one of these institutions have analysts cover every stock.
Yeah.
And so we don't know how they were personally handling Square the same way, at Tackle, we don't cover every stock, right? Especially from a fundamental perspective. From a technical perspective, the philosophy of Tackle is we'll trade anything, right? I mean, that's the philosophy of Tackle. But from an investing perspective, we don't have eyes on 6,800 stocks in the market from a fundamental perspective, and neither does Guggenheim.
That's right.
So we just don't know how many analysts they had on it. We don't know. So there might be context there. Obviously, we can make fun of them for missing out, but I do think Square is a slight buy, and we do got to navigate some choppy waters right now. But Square's a good company with good future in front of it.
Tim, he just came out and defended a whole host of analysts.
No,
mark this date down, baby.
I did not. I did. I wanted to add some context.
You're a Guggenheim apologist. Just own it. Just own it. No, actually, your point is actually well taken. You're right. We don't know the context. Yeah, but you're right. You don't know if they're always on the finger on the pulse of this. And you know what? Quite frankly, if you're trying to gauge different companies, I don't know. Like I'd probably say, look, when there's an earnings report, when there's something dramatic that changes, that's when we go look at it. Maybe they aren't looking at it unless there's a news type.
And they could be looking at their earnings report. I mean, yeah, it got sold off, but their raw earnings numbers were actually really good at Square.
Yeah.
So I could certainly see somebody at the institutional level being like, did you guys see Square's report? Have you guys not been looking at Square? What the hell's wrong with you guys? Get it together. And I could see somebody like, oh no, we got to make the boss happy. Let's upgrade Square. Yeah.
Good point. Good point.
Next one here, Nike, HSBC, and Cody, I'll give you this one to you. Nike upgraded to a buy from a hold at HSBC. Cody, agree or disagree?
Nike's been a strong performer for a long time. If anything, it goes to the same thing. How long does it need to be moving upward before they finally move it to a buy? And they happen to move to a buy right as it's going into more of a neutral pattern. I think they're late to the party. They should have classified as a buy 8 months ago, 9 months ago. Right now, I think it's neutral. So it seems like they wait for the chart to already move before they move it. So agree that they should have done it 9 months ago. Disagree with now because it's a neutral pattern.
Matt, you agree with that?
Well, when I'm looking at upgrades and downgrades and whatnot, I certainly do look at technicals like Cody just did, but I also take into account fundamental analysis probably far more than I do the technical condition. And I treat a little bit of the same way as I treat the Tackle 25. I look at them from a fundamental perspective. Nike is a darling of the market. There's no doubt about that. But it has a double top now. It's got wide range neutrality between 130 and 145, and let's see how it navigates that level. But when you're looking at Nike from a fundamental perspective, You're talking about a company right now with a 77 PE ratio, a forward PE ratio of 35. So basically, if they get everything right, they're still overvalued. And that's a concern to me.
Yep.
The price to book is rocking at 20, which is dramatically over elevated. I mean, to the point where it would break way too many rules for me to even look at Nike for the Tackle 25. It would just break so many different Tackle 25. So I look at it through that lens, and it's a company I really like. It's obviously a leader in its industry, and it's a darling of the marketplace. But from a fundamental perspective, I'm sorry, it's too difficult for me, and this is just me, but it's too difficult for me to look at a company like Nike, a consumer cyclical company with a 77 P ratio, a forward P ratio of 35, a PEG ratio of over 2, and a price to book ratio at 20, and think this is a good new entry.
No,
Investors don't care. The investors don't care, but I wouldn't be recommending as a buy from a long-term investing perspective until we see something transpire from a fundamental perspective. And that could be, Nike's earnings report coming up, the same way that could have been Nike's earnings report this quarter. And when Nike reported, it reported right before the quarter kind of began. And ever since that report, which Nike saw a contraction in earnings from the previous quarter, Nike has done nothing. It has done absolutely nothing ever since they saw a contraction in EPS from the previous quarter. The stock has went nowhere. And so that's a difficult buy rating. And quite frankly, I wonder what they're looking at from a fundamental perspective to put Nike into the buy rating. Again, that doesn't mean Nike's not a good company. Nike is a darling of the market for a reason. But don't you have to take into account analysis to some degree when you're doing this? Don't you have to take into account, man, Nike's rocking it at a very elevated PE ratio. Nike's rocking at a value that has very strong valuation concerns right now. And Nike is performing based on what its earnings numbers are doing in the last quarter. And so I think it's a tough upgrade. I disagree with it.
Yeah, it's a hold for me. It would be a hold.
Oh no, it's definitely a hold. It's not a sell.
No,
it's definitely a hold.
Neutral hold. Yeah,
neutral,
something like that.
Disagree.
Yep. All right. There were some other upgrade downgrades on some little stocks I'm not too concerned about though, but because we're working towards the end of the show. In fact, we're going to start wrapping up. I know Cody did join us here towards the end of the show. I appreciate that, Cody. I believe he's just here to scoreboard a little bit, Tyler, from what he's been chatting with me privately. He was very excited about his victory last night on Trade Masters. Cody?
Yeah, I dethroned the long-term champ, and you gotta love an underdog, right? And I do just want to scoreboard a little bit. Tyler was very humble in his loss, and I'm not going to be humble. I took down the champ, and it was a good victory in my opinion. Where my original plan was to counterpunch anything he threw out. If he threw out a naked put, I was going to beat his naked put. But then Tyler was like, "No, Cody, you got to go first." So I actually had to lead, and still took down the champ. So yeah, some scoreboarding there is I pulled him off his throne.
There's a phrase one of my old high school
Sounds like
coaches,
Cody needs to be humbled.
There's a phrase one of my old high school coaches used all the time. Matt says it all the time. Act like you've been here before, young man. You
I
don't
know,
have
no.
to come in and pound the table.
Dude, he's pounding the table in front of
I even said it. I'm not being
personalities that
humble.
want to teach him a very valuable lesson.
I literally said I don't want to be humble right now. I could be humble and I could be like, you know what? It was a really good match. Both of our picks, I mean, throughout it, they were really great. And I agreed with a lot of Tyler's picks. He actually had some picks that he put up before I could put them up because they were on my list too. I could do that, or I can say, hey, I won.
Good game, GG. It's that simple. Congratulations, young man. You're going to have to defend that title next
I
week.
know, but we all know the honest truth is that if Tyler were to go up again with me next week, he'd probably clean me out.
Oh, you can't do that now. You can't go out. You can't come up and be like, yeah, I'm Cody Mackey, everybody. That's all you need to know. Mackey showed up. Mackey did what he does. That's it. I'm me. You're you. We know what the scoreboard was, and then say, but Tyler is an excellent human being, and I really look forward to the competition next. Like, that's not how that works, because now you've lit the fire a little bit. You stoked that flame a little bit, and I think Tyler's going to come back with some degree of let me teach the young
Vigor,
buck
yeah.
a lesson or two here. Tyler, what do you got to say about what Cody's talking a little smack here, Ty?
Listen, when you win something once a year, you've been relishing it, you've been waiting, you have your moment. It just happens so often for me that I'm just whatever for me at this point. So I'm just happy Cody could have his moment.
Okay.
If you missed the show, by the way, Dylan Spicer says, they both had really good picks. I like that show a lot. It's a very popular show. If you missed it, the recording's right on our YouTube channel. I also blasted out on social media this morning, so you can find that link on Twitter for Tackle Trading, as well as Facebook and the others. But Cody, congrats. Last time. You're going to have to defend it next week. I'm sure somebody's going to bring the heat at you. Now you got a target on your chest there, young man, which is all right. I haven't seen all of your picks, by the way, but I was interested. Tyler was flashing me through a couple that you did. What was one pick from last night, Cody? One that you had, your best one.
Oh, it may not be the best one, but it was the most fun one. Bam. Yeah. Now it got kicked in the teeth.
It got bam today.
Yeah. but overall, really love this one, not only just for the ticker symbol and how fun it was to play. I liked it both from the weekly chart and how the weekly chart had a nice cup and handle. And then on the daily chart, it had a bull flag that started triggering that allowed both a conservative and an aggressive entry, depending on how you wanted to play this overall. Today did destroy that pattern just because now we got to wait for the break because the bull flag is gone. But I liked how it had both the long-term and the shorter-term entry points in order to get into this trade. And then also it's just fun to say, like, bam.
Bam. Well, at least you're having fun saying it, young man. I get it. All right, let's move back on the market. Let's get final thoughts here. ES contract, the SPY. Obviously, we've been trying to find some support here intraday as we've been doing the show. The selling has subsided just a hair there, holding up in trying to ping some of those levels down here. It's not necessarily a buy yet. We don't have a strong bid, but Matt, what are your final thoughts on this market?
On the ES?
Yeah, just general final thoughts for the day, final thoughts for the team out there.
That's, again, like I was saying earlier today, it's one of those navigation days where we got to let support kind of build in the NASDAQ, see this sell-off kind of form some degree of slowing momentum. And if that does, be a little patient as those setups come into next week.
Mm-hmm. Tyler, what about you? Final thoughts?
I agree. I think it was inevitable that the selling had to slow because of the pace. I mean, had it continued, guys, we'd be down 6% by the end of the day. So, so far that low is holding from Tuesday. So, took the NASDAQ real quick. It'll be an interesting close. I mean, we got 2 hours so far. We haven't broken the low. I'm interested to see if buyers come back at the end of the day or if we puke it up.
It's been the pattern.
Yeah, it has, hasn't it?
It's been the pattern. And if that pattern doesn't, it could get a little scary, a little hairy in the short term. Yeah. It certainly could. It's one of those environments. But even if it gets a little nerve-wracking and those headlines get a little scary in the short term, given the fact that NASDAQ does end up breaking that important support level, again, my take is that's just going to create a very good buying opportunity for energy, industrials, finance, and those overextended areas of the market. All that's going to happen is they're going to come down into the breakout channels.
Mm-hmm. And that's a beautiful thing, because if every sector looked like the NASDAQ, this would be a completely different discussion.
It's a different story.
It would be much harder to talk about buying dips and everything, but we're not that way, and that's what makes us a little more optimistic.
Yep.
Mm-hmm. Yep. And obviously tomorrow we're going to have, our scouting report meetings, do our final rankings for the week. Today's one of those days where you got to assess risk, have a preparation day for tomorrow heading into the weekend and for next week. And looking at those different sectors just today with you guys in the show, there's still a lot of strength out there, guys. So we're going to break them down one at a time, and we'll be back tomorrow. I dropped a link to our pro membership in the chat. If you're not yet a pro member at Tackle Trading, come and join us on the back end. 15-day free trial to our traders lounges. challenges. We've got some courses in there, nightly shows, all of those kind of things. There's no reason not to be a part of it. I mean, Tyler, you've been in this industry a long time. We give people a lot of content. We give people a lot of structure, a lot of education for their $97 a month, right?
Oh, it's ridiculous. It's ridiculous. Just ask anybody who pays for it. Yeah. And we're consumers too, right? I mean, I'm not going to pay for something unless I feel like I get more than what I paid for out of it. And our track record and community speaks for itself. So yeah, come on, try it out. You got no risk. Do a trial, man. You'll love it.
Yeah, I know you will as well. All right, guys, we're out for today. Have a wonderful day, guys. And we'll